Good evening. This is the Elliott Wave update for the S&P 500 for Thursday, November 4th, 2021. This squeeze continued. Just when you think it was going to let up a little bit, which it did get back in gear at the end of the day today. Not a great surprise, but let me tell you where I believe we now sit. I think yesterday I had put the 3 was here. But I had mentioned as we were moving higher that likely the 3 and the 5 would move up a little bit, and they have. Then we got the shortest, shallowest fourth wave out of this entire sequence thus far happens right up here at the top. And it was very fitting because the squeeze was still fresh in everybody's mind, and it just held things up because it actually was continuing. Now, so the fourth wave is done. So in my view, we are in the sub-minute, take it back, the minute wave 5 to finish this C wave. So it's a minor C wave, minute wave 5. It will also consist of 5 waves. But here is what I think may have accomplished already. So I have the ability to count 5 waves up. And it is a clean 5, but here's the deal. I think it's just a sub-minute wave 1, or at best it's a 1, 2, a 3, a 4, and the 5 is subdivided. So in my humble opinion, there is still upside to come. And we cannot take this number, basically 4,700, and toss it out the window and say not going to happen. The squeeze remains in place. And what is kind of happening is there are traders, and I don't blame them, that you just are getting to the point where it's like, I'm looking at everything, I'm putting together all of the fundamentals, all of the technicals and everything together, and this is way overdone, overcooked. We're in new high territory. And we're not really seeing that we have a lot of, not necessarily stability, but some instability in how business is going to function, with tapering, with the interest rates beginning to rise next year, if they're able to hold out that long. Will the infrastructure package pass in Washington? Will there finally be peace between all the working parties? And so there's still all of this uncertainty just floating around. That if we had things done, concrete, that we could say, oh, good deal, et cetera, then there's plenty of opportunity to come in and buy the market. But they're buying things now that really appear to be more of just a short squeeze in the stock. One of them being Tesla. Tesla continues to just, as we'll just do it again today. Bear with me while I throw up Tesla on the screen, so that for those who didn't see last Thursday's update, here's your chance. I'm going to repeat the same idea. Okay, so Tesla gets up today to 1,243. Now, last week when we had expiration, the market did the $50 call. How's that? But those are all split. Okay, let's get up here. Last week, we were dealing with 1,100. And the calls in the 1,100 calls that were expiring last week, they had traded 150,000 on Thursday, and I believe 187,000 on Friday on the expiration day. But the stock was not at 1,100. The stock was down below about, I think, 1050 or even somewhere even lower. But by just how things were lining up, the message was pretty clear that the stock was going to go to 1,100 or more. And it did. It went up to 1,100 to 1,120, I believe, or something like that. And now we are confronting this week's weekly expiration. And I had talked about that the open interest in the this week's November 1200 was fairly large. And I felt, well, I believe that that is what they're done for. That's where they're going to move this market. And to me, it's just another short squeeze. It's a way to squeeze who's ever selling the 1200. They're squeezing them into a position I'm sure a lot of them don't care to be in. But I'm just now focusing on that we had 30,000 trade today. So it's maybe cooling off a little bit. But then you have to kind of move up and see what else is. The next one is the 1250s. Look at that one, 97,952. So, and that was the open interest coming into that. That was the open interest coming into 1250. That's where it was most of the day. 1250 was within reach. I think that's where Tesla is going to try to close tomorrow. Now, we go one more, 1300. Cheap, cheap, cheap calls. Volatility is not as high as it was last week, but still pretty high. And this will decay very quickly, depending on where the stock can settle, what kind of range the stock can settle into. Once that range is set, then you're going to see all this vol kind of go. You're going to see a lot of the vol that's being put into the futures will kind of contract a little bit and go around other stocks that are going to be in play. Okay, so what we're seeing in the S&P and what we're seeing in the NASDAQ and what we're seeing in a lot of these markets really has nothing to do with the economy, nothing to do with anything else, maybe somewhat with interest rates because those are the topic du jour. But right now, it is purely technical, and the short squeeze, it's whatever. That's what's happening. And so I believe these prices are not grounded in market reality. So I think that what goes up as quick is going to come down as quick. So I still am counting this as an irregular B wave of an intermediate degree. And that consists of an A, a B, and a C internally. Those are well done. We remain in the minor C wave to complete the structure. And within that minor C wave, we sit within the fifth wave up out of 5. So we have 5 minute waves within that minor C wave. We're done with 1, 2, 3, and 4. We're in the 5th. It could extend, but if my view and my count is correct, again, we are approaching what should end up being a major high. I understand that it broke above the previous major high and is now about $120, excuse me, above it. And it's still corrected. So therefore the market, in my opinion, will turn on its heels and it will drop, and it will drop quickly and very persistently and get down below the low of wave A that's labeled wave A, but much further. So what I'm talking about is that it ends up below 42.68. And to be honest with you, where I believe it ends up is back down here, ultimately, not in the next week, not in the next 6 months. It's going to take time to get down here. But below there, that'll happen, I believe, quickly. So the S&P can lose 415 points very quickly, or wherever this tops out, very quickly until we get down below this A, and then we'll rally. But don't forget, this is a weekly chart. That's where the weekly 50 is. Trust me, when this thing gets going, that's what they're going to gun for, because that's the only support that likely will hold it. If not, then they're going for this. On a weekly chart, that's what it would spell. If we start to break these, now going back, because that hasn't happened yet. Now, what we can expect coming in is that it's an expiration tomorrow, that Tesla's in play, Microsoft's in play, Google's in play, Facebook's in play, which, by the way, we need to get used to calling it metaverse. Amazon's in play, Apple's in play, Advanced Micro's in play. Advanced Micro devices went up over $7 today. That's a lot. So we're seeing pushes being made. It is not out of the realm of reality that the stock will, with more ease than we thought, reach 4,700. Whether that will be able to contain and finish this will, one, depend on the time of day that it reaches that level. How people begin to react up there. If we see the tone change happen to where the squeeze is done and other sellers start coming in and go like, well, you know, I've held long this long, and they decide that they're going to have to turn their position, whatever causes it, we'll see it, because it'll seem like it's caving in on itself, which essentially it is. When the buyers have to turn around and look and say, oh, we don't really have any more money to stick into this thing. Okay, we now have to start hitting bids. Vacuums will occur, the markets will drop quickly. That's just the scenario. But I think it's very playable in both directions. So that's what we need to focus on. So for tomorrow, I do believe we'll see higher prices. So it's basically stuck in a rut right now. It's, I don't like it when it does that. Let me go down to the 15-minute chart. It is basically just trading right back up towards the close. So I don't think it'll go very far. We may see it drift back down, but if my count is correct, it's a very deep 4, but you know, I'm going to allow you, that's 1, 2, and we're kind of waffling around, getting ready to kind of explode higher, because we've seen this before. 1, 2, bing, goes up 3, plays around, and then shoots one of these. So, or another this to finish it. So 4,700 is very much in the realm of reality. And we have way above that. We're 47, 33, 34. Not out of the picture. It's all, we got to take this day by day. We got to see how all of this long versus short and margin calls and all the other stuff has to play out. But we are coming up to an area where I believe, yeah, that this is, the rally is the rally, and we can make money in the rally because we're day traders. I'm not position trading. If your choice is to try to pick a top, well, then try to pick the top. That's fine. But understand that the underlying forces, in my estimation, are much bigger than most of the market because they continue to push. As long as they continue to push on the stocks that they're choosing, the heaviest weighted stocks in the NASDAQ and in the S&P, God bless them, they're going to get what they want. So I'd rather play along. And downside, now, I keep saying, we'll know when it is done. The problem is, it's like many, I have been waiting to get that sign. So I'm kind of anxious at times. And you can't be over anxious in going, okay, we're gone, we're done, we're gone, and start plowing through. Yes, it's tradable, but be careful as you get to your moving averages, expect the bounce. How high they want to take it, that's not up to us, but we certainly can follow it. So these are tradable, not so much as it got into here, it got really kind of sticky, but this certainly was. In any case, I'm saying that it's tradable, but I'm not going to, it would be way too soon. It's a 15-minute chart here, and you have to be, what we need to see, excuse me that I'm kind of bunching the words together, but I want to make sure that I get my point out. What we need to see is the consistency and the breaking of the moving averages and the close of the bar below it. So, but that has to really come on an hourly chart because we're looking for a little bit larger weakness being evident in the market. It works if you're a day trader and you're seeing weakness on a 5-minute chart. Well, then you can kind of guess, for 5 minutes, we got some plays going on, and maybe we play it to the downside because that's what the chart's telling me. But we're also realizing it doesn't have to extend over. So it doesn't have to then suddenly turn the 15-minute chart negative and the 30-minute chart negative. It can have that domino effect, but you'll know it because it starts to break below lower moving averages on that 15-minute chart. So here, we're still just kind of wrestling around the 4 and the 8. The 20 really did not come into threat today. A couple of times I thought, well, if it breaks there, then oh good, then we're heading lower. It kind of got threatened, but not really. Support was always extremely evident and just took it right up off that level. You can see it, bing, 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 right there. So that just kept it alive to go up. That's going to remain because of the stocks in play, because of Tesla, because of NVDA. NVDA got an upgrade today. Right before a weekly expiration, God bless them. It's going to be in play. It has a weighting in the NASDAQ. So we've got that in play. We've got Microsoft in play. We have Google in play, Facebook in play, like I talked about. Amazon, Advanced Micro, and Apple. Big stocks. Now today, Moderna got its head kicked in. Roku got its head kicked in. Does it recover? Does it continue to go down? Pay attention to the options. That's what I would say. The downside, you'll know because it'll break on the hourly and close. The hourly chart will close below. It closes below the 20. Then I think we're opened up to go down to from 46.60 to 46.40. So it's breaking that 50, the hourly 50, that's going to be the major point. Because you can see it slips. The support, yeah, it's Fibonacci, but the moving average tells you that's where it's going to eventually head. That's what the expectation would be. Again, hourly chart. So keep an eye on it because it'll affect how you want to look at your 5-minute chart. Now, enough. I am not expecting a market collapse tomorrow. Once again, stranger things have happened. So be prepared for the upside. I know it can be very difficult to be purchasing at 4,686, but it may be the call. So use your stops, use the moving averages, use the fibs, and read the price action. Tomorrow's expiration, be aware. Next update will be on Sunday, November 7th.